Morning, everybody. It's Gil here. It's Thursday morning, July 19th, the middle of the, I guess for the rest of the U.S. at least. I don't know what it's like in London there, Dr. K, but it's very nice weather here on the West Coast in Playa del Rey, California. And so I guess the rest of the country's been experiencing a heat wave, which, of course, proves that global warming is real, and we all need to buy Priuses and drive deathmobiles around in order to be politically correct. But in any case, enough
Yeah,
of the
those
politics. That's going to be all my politics for today. Well, maybe not. But, we're in the middle of summertime, and Dr. K, has the sun come out there in London? You were just in Bulgaria, weren't you? Did you miss that terrorist bomb attack
yeah,
that hit some Israeli? Well, that's good.
just by hair. It's nice and cloudy here. You would never think it's July, but I love rain, and I love that the weather is temperate right now here in London. So
Yeah.
while everyone might complain about the weather, I'm loving it.
Well, soon it's going to be time for you to come home and experience some of the weather here in beautiful Playa del Rey. Anyways, for the rest of you, I hope wherever you are, your weather is good and you're enjoying the summertime. Now, the market, of course, is doing its best to kind of drive everybody nuts. It kind of looked last week, at least from where I was sitting, that you had a rotation out of technology, which started to look ugly, and into some other types of stocks. You saw some of the FERTs moving, some of the builders were trying to move, building-related stuff, some materials-related. All these were trying to look like they were going to rotate that way. And then all of a sudden, it seems like this week that has shifted. And so you kind of got a market where you're sloshing back and forth in sort of rotational fashion. But the bottom line is that the indexes continue to move higher. And if I can find my NASDAQ chart here it is. You're looking at my main screen. I'm actually, we're long the market right now, and I'm playing pretty heavy in F5 and Mellanox. We also have some TQQQ, which we're trading on the basis of a short-term timing system that we've been working out that Dr. K and I actually, we developed this pretty much together, right? And we call it, we combined our names on these respective systems to come up with the name 620 Crossbow. But no, we're not putting it up on the website yet. We're still testing it, but it seems to work really well in this environment, and I'm not sure how applicable it is in terms of tempering market direction model signals. I think the signals are what they are, and everybody's going to have to figure out how to use the signals in the market direction model. And I'd even say, at the risk of sounding cynical, that one could even use the market direction model as an oscillator. Now, if you recall, last August, September, the market direction model was awesome at picking off these inflection points that we saw. Let's see. We can get, where did that occur? Is this what I'm looking at here? Is this August of last year? Yeah. And it picked off all these inflection points really well. Sell here, buy, sell, buy. I think there were several of them. And, of course, everybody's singing the praises of the market direction model. And I should admit that when the market direction model works that well, it's our model. And when it works like it has recently, it's Dr. K's model. So I just wanted to clarify that one. So you guys know whom to hurl your invective at. Sorry, Dr. K.
Oh, that's fine. I have tougher armor. I can take it.
And I just want you all to know that if it starts working really well again, it will become our model again. Right on, Dr. K. All right. Anyways, so here's the index is doing their best. In this case, what we found is you go to buy here, you go to sell here. And so the market direction model is kind of working in reverse, but that's just what's happening. And you get emails, you need to fix your model. It's like, yeah, in hindsight, we need to fix it in hindsight. But what we have done is we're looking at some short-term trading systems to implement during volatile periods. Now, the trick there is if you start using something like this 620 crossbow, as we call it, that we like to use internally, how do you know when it's going to get you in the wrong side at exactly the wrong time? And that would be when you start a major significant new uptrend. So there's a lot there to weigh and to balance, but hopefully we're learning more about how this market's working. How we can bring that to bear in future MDM signals still remains to be seen. But I would say in general, it's kind of working for us as far as the testing on in the portfolio that we're running using it. So, but it is what it is. And so I think you have to understand where you're at with the model and use it accordingly. I mean, you could use it as an oscillator to fade, I guess, if you wanted to. But in any case, you can see all it's doing is chopping back and forth here. My little cursor is going back and forth with the market. Follow the bouncing cursor, and you see pick up some volume, and we're moving higher. So most people cannot fathom why we could have a rally, but I'll get back to this thing at the risk of offending Obama zombies, and that is that Mitt Romney in a New York Times poll last night or this morning is ahead of Obama 45 to 43, and I find that interesting for an NYT poll, which tends to lean, more, shall we say, not socialist but democratic. They tend to favor the Democrats. But in any case, most of the media does, as far as I'm concerned. But that's neither here nor there. It may be that the market still, there's this potential for a so-called Romney rally. And I know we can go back and look at the Reagan rally. We've talked about that, and you can argue whether it's exactly the same or it isn't or whatever. But one thing to note is that we could be coming out of a secular bear, in other words, a big sideways market movement over the last decade or so, about 12 years, I think, something like that, 11 years maybe. And it's coincides with the 70s. Now, during the 30s, after the Depression and the crash in 29, you went sideways, but it was a big cup formation that the Dow formed, and it was a 20-year correction, you might call it, before the market broke out to new highs. So there is some coincidence in terms of where you are in the cycle. You may be at the end of a secular bear, and it of course occurs when the end of the world is coming and everybody's certain that all these awful things are about to happen. And it was similar to the 70s, late 70s, early 80s. If any of you were around in the late 70s, and hopefully not too many of you were, because that would mean you're an aged person. But in any case, like myself. But in any case, there was a lot of fear. The Soviet Union was in power back then. There was all kinds of fun stuff going on. So, the hostages, the U.S. embassy in Iran, hostages were taken. That was kind of a downer, and seen as a sign of the U.S.'s final demise and loss of status and power and blah blah blah. So, the point is everybody was pretty morose. We were at the end of a 10-year secular bear market, and then the market broke out a couple of years later after Reagan won the election. So, there are some similarities. There's also some dissimilarities, like interest rates were not at 0% back then. They were actually pretty high. And Volcker came in, Fed Chairman Volcker back at the time, came in and jacked interest rates. And I think, do you remember, Dr. K, what were money markets paying in like 1980? Like 21%, as I recall?
Yeah, they were insanely high, record highs. And, it was, as a lot of bond traders said, it was a no-brainer. It was one of those rare times in history where you could just, know that the interest rate levels are going to be coming down substantially and make a killing that way. And that's what they did. You didn't have to be in stocks.
No, and I actually remember my fraternity, the treasurer was praised as a genius because he was putting the money into a bank account and leaving it there before he paid it over to the university for the rent of the fraternity house. At Stanford, the university owns all the fraternity houses, so we had to pay the university rent. But he'd stall them and keep the money in the 20% money market and try to get as much interest as he could. And of course, when rates are that high, the time value of money is very high, and so you want to hang on to it as long as you can. And that's exactly what he did. Now these days, money has no real time value at 0% interest rate. So that's a big difference. But, it's not necessarily apples to apples or even oranges to oranges. It could be a blood red orange compared to a tangerine. There's some similarities, but many differences. But, that could be a foundation for a rally. So I would not discount a possible rally in the market. On the other hand, I don't really see how you make money selling short. And on that note, I can get to, well, we don't need this NASDAQ chart anymore, do we? I can get rid of it. Let's just look at not Oseer Therapeutics, not a stock I'm really interested in, but let's look at F5, and this is a stock we're looking at as a short. But as I pointed out last week, I don't think you're in a position here where you're in a high probability and high profitability position for a short sale on F5. So I'm actually long the stock this morning, and the reason I am is this morning after they announced earnings after the close, they dropped a couple of bucks. The stock was bouncing around, so I decided to throw out a couple thousand shares short, and around 96, I think it was, and they started pushing me very quickly. Stock came in a little bit, and you see it kind of drop, and then you see the bids come in, boom, 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 they're taking it up. And I just reversed my position and went long, and pretty heavy action. I'm running a 100% position in F5 off the 98 level. Roughly, so I don't give them more than a couple of points on the short side if I'm going to test them. And in this case, the thing turns right around in Zoom. You're heading through what looks like near-term resistance, but it may just plow right through it. The 50 days coming up, But I think that the news in Mellanox is what's driving F5, and a number of the other networkers, so-called cloud networkers, are moving on this news as well. And Dr. K, did you deem this to be a Bible gap up move?
You're talking about
Mellanox. Everybody
on,
sees my Mellanox, right?
Hold on a second. Your screen is frozen on me. It's still showing Osiris.
Oh. Does everybody see the Mellanox chart there? Everybody says the screen is fine. It must be that cheap European internet you're using.
Something like that.
I don't know. Ross Haber's in Spain right now.
He's what?
Ross Haber is in Spain, and as you all know, Ross runs the VMAP Virtual Self-Investing Managed Account Program strategies. Well, he actually runs the whole thing, but he primarily focuses on strategy C. And he was having trouble with his internet this morning, so he kept, no matter what he did, he kept getting an expedient.
I get worse speed in general in LA than I do here. Here it's screaming fast. Actually, it's the first time of all the webinars we've done that your screen is frozen on my side. So I don't even actually know how to reset it without logging off and logging back on.
Well, if you need to do that, go ahead and do that. I can just continue babbling here, as you know.
But I'll do that after my comment on Mellanox, and that is, relative to the chart pattern, it had a huge gap up of about 40%, and that's a bit extended relative to the chart. So in some cases, we're going to pass on a viable gap up. I mean, it's a gap up, of course, but whether it's viable is contextual to the chart. That said, it behaved constructively in the intraday action, so we took a small position in this because it's doing what it should, and we also know that our stop loss is pretty limited because it essentially would be probably the low of today's low, which is based on where we bought it. We're not exposing ourselves to a whole lot of downside. Now that said, what is perfectly proper is to wait to see how the stock trades in the ensuing days. If you look at the prior gap up on April 19th, it went sideways constructively for a number of weeks, and that was fine, and then issued a pocket pivot. So in this case, when a Bible gap up, when a stock gaps up an excessive amount relative to its chart, sometimes it does just that. It just goes sideways for a while, and then proves itself by going sideways instead of just collapsing on itself, on its weight of the gap. So it depends on the type of investor you are. We're a little bit more aggressive, so we're going to take a small position here.
Yeah, and I would have to say in the portfolio that Dr. K and I run together is a 20% position right now. So, and we picked it up around 92 on either side, just kind of nibbling away. But in my own account, I'm running at 90% position again because I think that, and the basis for this is based on, number one, my experience with F5 this morning trying to short it, where it just shoved, it's going up my nose very quickly, and I had to turn around, flip it, and go long. Okay, so I'm always very willing to do that. I know a lot of people have trouble understanding that, but like I said a couple of weeks ago when I was on Fox, the one advantage you have in stocks relative to artwork and real estate and other hard asset type things is that you have liquid markets and you can just trade them all day long as long as you don't use up your day trading buying power in the process or your buying power. But I'll come in and I'll go in heavy, and my thinking is this: if F5 on 18% earnings growth, it's a cloud networker. Mellanox is related to that whole thing. If F5 can get over 100 with 18% earnings growth, then I think Mellanox can easily get over 100 before it starts to move sideways. And in fact, yesterday on the earnings announcement, it did. So a lot of that, we come in this morning and we're not so sure about it, and it's still not 100% certain that this thing is going to go higher, but just getting a feeling for myself viscerally, being first shorting F5, covering 98, and turning around and going long, just seeing what kind of strength is, because you look at the volume on the thing, it's massive, and they're just jacking the thing very hard right now. In the last few days, this to me looks like it could be a bottom, It becomes very obvious here on the short side. So on that basis, I thought, okay, Mellanox, it has to go higher, and if institutions suddenly find that they need to be in cloud networkers and networking in general, and Mellanox is now clearly, in my view, the leader, far and away, and they want to drive up F5, then I think they're going to keep Mellanox at least above the 90, 91 level, and I would look for that as sort of a low to hold into. If it starts to back below that, we'll probably back the position down, maybe hold 10%, and then see where you can go from there using that 89, what was it, 89 and change low this morning. Let me see if I can pick that off. What was that? Oops, up here. 89.01. So that you can use that. So if we're running a 20% position, my thinking though is intraday. I'm just watching the intraday chart, and you can kind of see here's your low, but you retest it. Notice how the volume's lower here. So I actually like this. You came down and then tested, set your low, you rally back up, then you on a 5-minute chart here, you pull back, and notice how the volume's lighter. That's what I call a white coffee and retest. And all it is the idea that you hit a low, then you come back and you scare everybody and you bounce up, and everybody who's late selling now comes in to sell, but there isn't enough selling pressure to drive it further, so it holds the low and then turns it goes higher. And then using our short-term system, I decided we could take a position on an intraday basis. We can run a very tight stop on it using our 620 crossbow, which we find also works in terms of timing buy points intraday for stocks. We find that that's useful. But I actually initially developed my half of the system for short selling because I noticed I would make a lot of money very quickly on the short side, and usually to turn things around on me very quickly, I needed some sort of quicker reference to get me out and to taking profits. So I developed this system I call 620 and showed it to Dr. K, and he added a few things and back tested it further, and then we expanded it and made it a little tighter, I think. And we decided to mix our names up. So 620 crossbows, that's what we use here. So it's helping. And I noticed there's one guy out there, Dave Eccles, who's a subscriber and a friend of ours as well, who was using, he had shown me a chart of a system he's using, and it's very similar to what I'm doing in terms of the types of signals he's looking for, but it's definitely his own. And so it does show you how in this market you can, you have to find, if you're going to succeed, you have to find ways to succeed. You have to try and look beyond the surface and come up with some creative solutions. So, but that's for us, we're aggressive traders. If you're slower now and you held, on this basis of buying the pocket pivots in Mellanox here, it runs up, and I actually did pretty well. I had an 80% position in it and sold it up in here as it was starting to get weak, and I did pretty well. Now you could have come back here and on the basis of yesterday's pocket pivot, which even though some of this volume is from after hours trading, it was higher by the close, and so it was a pocket pivot yesterday. And you could have bought a 10% position, the stock goes up 50%, that's going to add 5% to your portfolio. So if you think about it, with an 80% position running from here to here to here, in my own account, 80% position on what was roughly, a 20-30% move, I'm making most of that move. So for me, it's a lot easier to come in aggressively when I think I have more of a sure thing. If you wanted to buy yesterday, you are, to a certain extent, playing earnings roulette. And you have to understand that, but I think if you took a 10% position and you own it, and I know that there are a few of you out there who do because we received several emails thanking us for the idea, and we're thinking, yeah, great idea, we should have loaded into it yesterday ourselves. But in any case, we're loading into it right now, and you can see the stock is pushing 95, so we're actually heading for the high of the day, which right now is 95.55. Let's see if you get there. But my thinking is, on the intraday, it sure looks like it wants to move higher. So, I think it's a good risk reward, and I'll play it very aggressively myself. And in the portfolio that Dr. K and I run together, 20% position right up to bat, that's a pretty decent position. So, but we're also running 20% F5, and we're running some TQQQs in there too, which are starting to move up for us. So those are working okay. So, that's kind of how we're looking at the market now. Other areas that look interesting here, you get the Amazon with the pocket pivot, coming off this little area back above the 50-day. And, this is how the market drives you nuts. It does violate the 50-day, turns around and goes back up. But, LinkedIn did the exact same thing, violated the 50-day, turns around and goes back up. I don't like this, though, because the volume levels are really not what I want to see. Dr. K, can you see my LinkedIn chart?
Yeah.
Okay, so you're all fixed. Now, we're running 47% below average volume for this time of the day, so I know play here. It's not something I'm into, and I think with Facebook being a bit cheesy here on this breakdown, we like the fact, last week, you look at the volume in here, it's very light. Let me pull this and right in here, it's very light, so it's pulling back in this couple of candles, so look constructive. For some of you who use a 10/20 cross, you can see the 10-day moving average cross the 20-day. That might have been a negative, but my view was we're going to sit here and nibble on the stock, and as soon as we see the volume picking up appreciably, we're going to dump it, and that's basically what we did. The idea was we can nibble in here as it's pulling back, and then I was looking for a breakout up through, say, 33.45, roughly, somewhere in there. This high, actually, 30, which is 32.88, and then up here is 33.45 twice, I believe. Well, 33.45 here, so we're looking for some kind of a breakout through these levels here. above 32, definitely, and that never occurred. So I think at this point, you just have to leave the stock alone and see what happens at the earnings announcement on the 26th, which I think is next week. And of course, we got a bunch of them coming out then. So it should be an interesting week next week, including Apple, which acts okay. I think, though, with Facebook, there is some talk of Citigroup, which has a pretty strong presence on Facebook, implementing some sort of social banking or social financing or whatever with Facebook. And there is talk of Facebook being able to leverage its huge subscriber base, which is it's massive by any standard. And I don't think growth rates are so irrelevant, even though the stories about slowing growth rates of subscribers is what's knocked the stock down recently. I still think the forward-looking story, which you have to keep in the back of your mind, is that how they leverage that subscriber base, which is massive, is really the key to their future growth. And if they're able to leverage it into advertising, and then I think even more importantly, payments, like PayPal, becoming a Facebook-type PayPal, and if they're doing it in conjunction with a lousy bank like Citigroup or any bank really, or any major financial institution, I think that could be big for them. So, but that's just where the theme that might drive a rally, and so we let the technical action tell us what to do from there. And at this point, the technical action is just telling you stay away, and that's exactly what we do. So, there aren't a lot of things that look incredibly awesome in this market. Apple is holding up. And it's coming off of the very tight action on the 10-day moving average, and that's acting well. I notice also Union Pacific is breaking out of a base today, and the volume is very good. They came out with earnings, but you're actually breaking out of the base here. Notice how you break out and you fall back into it, and now you're moving out. And there's never really any convincing volume in here except over the last 2 days. So now that the earnings are out, it's trying to move up. But this is actually, I think, constructive for the market. And if I see stocks like that acting well, the rails, I think that tells you something perhaps about potential improvement for the economy. And again, I do believe very strongly that if Obama is out and his policies, and I think being objective again, just listening to his comment or his little theme that he tried to work on the other day about entrepreneurs and business, people who start business, you didn't build that. Somebody helped you, and that's all. Of course, everybody gets helped. We're all brought into the world by our parents, who then take care of us and raise us. So yeah, we all have that. But I know a lot of business people, and I know a lot of people who started businesses from scratch, husband-wife teams, solo men, women, you name it, and they start businesses, and they really sweat their butts off. And I saw my dad do the same thing with a small business, and I think for Obama to make a statement like that just shows how immensely and incredibly out of touch he is, and I think that's why his policies are just nonsensical when it comes to promoting economic growth. Aside from that, I think the guy's a lying sack, but that's another issue altogether. And I did promise to stay away from politics. But objectively speaking, I do think the market could at least perceive a Romney or a change in policy as being constructive for the markets and rally on that basis. It doesn't mean that Romney necessarily is the solution to our answers. Or the answers to our solutions, whatever. Anyways, let's go through some more stocks here. I like this NSM, continues to act well. You get a pocket pivot in here, right here. No, wait, right here. Yeah, but it doesn't really go anywhere. But notice how this thing is really hugging the 10-day nicely. So acts well. The mortgage area is still pretty strong. Eagle Materials, we had a little bit of this, but we just tossed it. It's not really impressing. It's not something we wanted to hold into earnings, so we blew it off. We think we'll let the market get stronger here and move into positions as they show some convincing strength. And so these don't really. D.R. Horton was a builder, same thing. It's kind of drifting, and yet a pocket pivot in here, but still chopping along. I noticed there are still a number of houses in my neighborhood up for sale, and I know my neighbor up the street, 2 houses away, has been trying to sell his house for the last year. But of course, he has 6 dogs and lets them all in the house. So I'm not sure what the inside of the house looks like, and maybe that doesn't sell too well, or if there is a pervasive odor of dog excretions of various types. But in any case, we'll see if that happens. But I think really, if we're going to start a new cycle here, or a new bull phase, let's say sometime between now and the end of the year, and the market is simply setting up, then I think you're more likely to move towards some of the stronger technology areas, and I think, of course, cloud networking remains very viable. You can see these stocks Mellanox still trying to push for the highs, not quite getting there, still buck off. F5 continues just pushing higher, and on the 5-minute you can see it's going higher. Goldman Sachs, I think, is an interesting stock. It sells at 0.65 times book value, which is very interesting. So maybe that just tells you it's a real piece of garbage and there's something nasty in there. But I've been keeping an eye on these financials. You'll notice he's trying to round out, and you do get a pocket pivot here that comes up through the 10-day and the 50-day. Now, as the 10-day crosses, maybe that's more constructive, and you might watch for another pocket pivot. You're seeing that also. Acting reasonably well is also Wells Fargo, so you're seeing some of that. I think, what are some of the other big financials, Dr. K? Morgan Stanley, let's see, not so hot.
But yeah, they're not looking real good, Bank of America.
No, it's a spotty, it's sort of a spotty thing here. So, but it'd be interesting to see how Goldman Sachs pans out.
XLF, on the other hand, has been on a relative basis, it's been showing some signs of life over the last few weeks compared to some of these other ETFs.
Yeah. But generally it's not a huge number of stocks. Most stocks are moving up through their bases, and so we don't see a huge number of things that are viable. So that's why I find a couple of things to sink our teeth in today, and we'll kind of move in on them. But it may require being pretty quick, and we'll just have to see how things pan out throughout the day. So let's see. Put my 5-minute back. I'm going to answer some questions here at this point, and the first one we have is Coors, a pocket pivot. I kind of think I don't really like that. It's very V-shaped, straight down, back up, so I wouldn't consider this a pocket pivot here yesterday. I don't think you have enough volume either. Do you, Dr. K, on this one?
1 second here.
Mm-hmm.
My alert just went off, and it's blocking the screen, so I'm taking it off. KORS.
I know that somebody says they got 2 to 3 inches of rain here today. Huh? Where's that?
All right. I mean, we're at, but yeah, I don't think it's gonna. We're at 630 right now. Yeah, it could make it, make the pocket pivot volume, but it's kind of choppy pattern. I'd be more comfortable actually seeing this rise above 44.73.
Yeah. My thinking too. I'm also not all that hot on retail here. The areas, like this, I was a chicken shit and sold my Mellanox position yesterday before any kicking myself. Yeah, well, you could buy it here like I have. And if you guys recall, last week I was buying it, trying to buy it up to 64 level and getting a couple of bucks out of it and selling it and being real proud of myself after it broke below the 50-day moving average on, I believe, Monday. And no, wait, that would have been Tuesday? Yeah. And so, because I bought this break here off the 58, it ran up a couple bucks, sold in here, and then it's breaking to something. Oh, I'm so smart. And yesterday I didn't decide to do anything with it. Of course, now we're gapping up. So, I really wouldn't worry too much about it. It's a tough thing to play, and I would not get yourself worked up one way or another. Don't kick yourself. I don't really think that helps. You did what you thought you should do based on your assessment of the risk and the assessment of your own risk tolerance and preferences. And I think if you made a trade or didn't make the trade on that basis, then you did the right thing. You could have taken a 10% position, but you might be kicking yourself if the stock was down 10%. The way it acted certainly didn't seem to tell me that you could tell for sure. And so, you're taking a chance, I think. In other words, you're playing earnings roulette. So I would rather be on top of the stock here trying to buy this and see where it goes. And I got a tight stop, good reference point. It's showing power, a lot of volume, so institutions are in there buying it. And I think the stock is worth a lot more than 94 bucks if I had to get into valuation analysis. But then that's just me. Certainly, like I said, if F5 can be over 100, I don't see why Mellanox can't, because it's growing a lot faster, and I think they have much better grip on their market than F5 does on theirs, although apparently the market does like F5's announcement yesterday, even though it was 18% growth. Now, Vivus, everybody's asking, that's just a Bible gap up yesterday. Stock got FDA approval on a, as I like to say, the South Park drug, also known as a fat-ass drug or an obesity drug. And it's breaking the 50-day, so I'm not, as soon as it didn't hold the low yesterday, in fact, for me, if it could not hold this high, which is 29.90, as soon as it got down to that 30 level, it's like, kiss it off, goodbye, I'm not playing with you anymore. And so we're out. So, but I think if you have a Bible gap up, we know the rules for Bible gap ups. You know where the stops are, and you should be way out of that turkey, hopefully. CMG is coming out with earnings after the close. Straight down, breaks on heavy volume. Now you're wedging back up a little bit. You got some volume in here, but still the 10-day moving average is below the 50. That's a weaker position. You got a lot of overhead, and it's all going to depend on what earnings do. You're playing earnings roulette as far as I'm concerned. So, not a stock I'd be looking at here. Somebody says, I own Mellonix. Is this a pyramiding opportunity? Well, I think on the basis of the Bible gap up and the fact that you have a clear exit point at the lows of the day, I tend to think 90, 91 is where it should hold. And I'm going to stick my neck out a little bit and say 91 at least. Otherwise, I'm going to back away from my heavy position. And I think if you already have a position, now you're way up on that thing. So you could add, another third or a quarter or half if you're feeling in a real randy mood and aggressive. I guess you could do that. So Monsanto, broke out here. Let's shrink this a little bit. So you can see the stock broke out. You got kind of this cup with handle. And it breaks out, so you've broken out through 84 and change, and it's running up. I notice this has acted well, and so has CF, breaking up, and not a lot of oomph here. AGU sort of had a Bible gap up yesterday. It's reversing today, so, a little this, a little of that, and up a little bit, a couple, 3% from the breakout point. Nothing terribly exciting. I don't know if those get me all that excited, because one of the problems I have with these, if you look at AGU, for example, the early June lows are here, right around 75, just under. I think that's a 7428 low on this day. And you come straight up from the bottom, okay? So this Bible gap up, and I don't think we mentioned this yesterday. We didn't put a report out on this, right, Dr. K?
We didn't.
Yeah, and the reason why is that, and it's interesting, we both probably saw it, but we didn't even mention it to each other because I think we both saw the issue here, and that is that you come straight up off the bottom. So this gap up here, even though it comes after a breakout from this little pattern here, it strikes me more as an exhaustion type of gap coming off of a very strong move off of these lows in early June. So I'm not going to play here because I don't really trust this because of that. It's already got a big move in it, and this seems more like an exhaustion gap. I could be wrong, but that's
yeah. None of the stocks in this group seem to be having that force, that upside force that I like to see in a pattern. And so I haven't been real interested in the group. I mean, they are commodities based, and the UK and more than half the Eurozone countries being in recession strikes me, and China also slowing their growth to some extent, strikes me as a weak platform for commodities growth at this time. I mean, I think commodities will have their day again since all this money printing is going on, but right now I'm not seeing the evidence in the stock charts.
Yeah, me neither. Watson Pharmaceuticals. Now the biotech area has had its areas of strength and weakness as well. We saw that with Questcor last week. And Watson Pharmaceuticals, nice little breakout. Ross likes this one. I don't know if you're in here, Ross. You're probably out there partying in Madrid, but we're having a siesta because it is afternoon there. But in any case, this is a pocket pivot type breakout. In fact, you had a couple right here, one off the 10-day and then one again off, one up through the 10-day rather here, and then another one off of the 10-day moving average. And now you're going tight sideways, so that looks okay. But you notice not a lot of volume, but it's acting okay. But to me, not the kind of thing that gets my blood boiling. Like I said, I'm running 100% positions right now in Mellanox and F5, and I'm up on them and picking up a good 3-4% on them to the portfolio. But we'll see where these end up. Knock wood, as I tap my head. Anyways, so it does look good. Looks like a buy now. It's viable. Yeah. I mean, I don't know if it's that exciting, but when I say something isn't that exciting, it usually turns out to be a lot more exciting than I think. So don't listen to me. If you like the stock, you like the story, you think it's in a viable position, go for it. As Ross is fond of saying, you can take any trade you want as long as you know where you're getting out, and he's absolutely right there. Alexion breaks out, comes down, bounces off again. Not a lot of volume, so it's kind of a wedging bounce. I'm not so hot on this name, mainly because I think that you're in a later stage position here. But with the movement into Europe, maybe they do have some further growth potential. So I think if I owned it, you'd have to use the top of the base or the 50-day moving average as your selling guide, I suppose. Although in this market, that's really been cause for faking people out more than anything, as we saw with the Amazon chart, which had violates the 50-day moving average here and then just turns around. And of course, LinkedIn does the exact same thing, violates the 50-day moving average and turns around. So I don't know. You could definitely, I suppose, deal with it that way. But right now, I'm kind of looking for fresher things to play. CF we talked about already. Same thing as AGU. Okay. What bothers me on this whole breakout is just a sharp move, really off the mid-May lows, chopping your way higher here, and then zoom straight up. And this doesn't seem like enough time. About 1, 2, 3, 4, 5, 6, 7 days of consolidating this really sharp move. To me, that seems like insufficient time. So I think this movement might be premature. And we did buy some of this at like 196, 197, and then we tossed it yesterday. We're sort of intermediate traders here, I guess, right now, but that's sort of the approach we take as we're kind of bobbing and weaving with the market and trying to figure out where the areas for big upside moves are. Anyways, Apple we talked about. Priceline, we showed you guys that one. It's just moving sharply up through its pattern, up to the 50-day. I don't know if it's enough volume for a pocket pivot. When do earnings come out? Next week? Dr. K?
Let me see here.
No, they come out beginning of August, first week of August. So, it's trying to come off of its base, and I guess we could look at, where'd my Wiggly chart go? I lost it. No, that's not it. No, that's not it. Here it is. And here's Priceline. So it's building a base. They're still looking for a buy point in here. So you notice the Dow's kind of flaking, but the Nasdaq's remaining strong. I think you're okay, and I wouldn't pay attention to the Dow because there's a lot of doggy stocks in there, and I think AXP is getting smacked today, and there's a couple other big names in the Dow. Just keep an eye on your Nasdaq-related stocks, and the S&P seems okay. But again, the rotation has gone the other way. So the rotation we were seeing last week where the Nasdaq was underperforming briefly, now we're at the point where the Nasdaq is now outperforming. So it is still tricky. And that's why we tend to be very selective here. So someone says, I have a question on Livermore's shakeout patterns. You mean Livermore's old rule of a shakeout plus 3? You can go ahead and send us a question. I don't know what the question is. EDC. Somebody said NEDC. What is EDC? Direction on daily emerging markets. Yeah, that's kind of doggy.
EDC, that's a 3. That should be the three times emerging markets bull. So if the market, if the general markets are going to go higher here, they should do pretty well. Well, in theory, because emerging markets tend to be a lot more volatile.
Yeah. Stratasys, we put out Pocket Pivot yesterday. It's a thin stock, trades 363,000 shares a day, so I'm not sure I'm excited for that. I need thick ones. I can't have a 100% position in this thing. Okay, but maybe if you can, you buy the breakout, you're using a standard stop, or you can just use the top of the base. You got anything to say on that, Dr. K? I know you tend to like those thinner things.
It's really borderline. I mean, it is a thin stock in this environment. I tend to shy away from these thinner names because it's been a really tough kind of environment.
Yeah, it's
not forgiving for these types of thin stocks. The market cap's barely, it's just over $1 billion. So that makes it, on the thin side. And fundamentally, it's looking pretty good. And on the technical action, it's a bit wobbly. It's a bit. There's a lot of volatility in that pattern. Especially if you look at a weekly chart, there's not a lot of coherence to that pattern.
Yeah.
So, I would tend to shy away from this at this time.
Yeah. Although, if you have a smaller account, you can buy a few hundred shares, and that's all you would buy, then I guess you could go for it. Somebody's asking about WXX, which is a payments company, I believe. Let me check this. Right Express Corporate, finance, credit card payment provider, I guess. There's a couple of these that are acting pretty well. There's another new issue I've been keeping an eye on, Vantiv, and that's another one in this area. I think it's interesting. Vantiv seems to have better earnings, and this WXS next quarter expecting 8% earnings growth doesn't really thrill me. Vantiv saw 32% last quarter and 100% the quarter before that, but they're looking for 250% growth on 28 cents a share for the June quarter, which will, I guess, be coming out shortly. And I tend to like this as a new issue if I'm going to play that area. There's a couple other stocks I know that have been acting well in that space. They're like Total System Services, I think, is another one. TSS, and also Verifone was looking good, and it recently blew apart. Maybe these little guys are starting to take out their business. I don't know, but that's that's kind of what I'm looking at in the group. I would tend to favor this Vantiv because it's sort of a newer issue, and I don't really know much about the story, but I noticed that that group is acting well. WXS is also acting well in that group. What percent increase in the index do you want to see for a follow-through day? I don't know. I stopped paying attention to follow-through days. I just watch stocks. Dr.
Yeah, I mean,
K?
strictly speaking, it's 1.4% on the Nasdaq, 1.3% on the S&P 500, that said, there has to be accompanying leadership, constructive action on the part of leaders, because, and that's always been the case, because that puts more odds in the model's favor for working. And that said, in a trendless environment, price volume action is pretty meaningless, because you can get constructive price volume action over a short period that pushes the model and the buy signal, and that's accompanied by constructive action on the part of leading stocks, and then the market just heads south for whatever reason. Sometimes it's a news-driven reason, and that takes the model out of the market because maybe the fail-safe triggers, or maybe the leading stocks themselves start giving back quite a bit. So trendless environments are not MDM friendly whatsoever. They've never been. These new shorter-term tools can certainly, I believe, help the entry and exit points on the MDM. So we're working toward that at this time.
Oh, let's see. Coinstar is violating the 50-day moving average, and I guess they're coming out with earnings one of these days, not till the end of the month. But it's violating the 50 days. So the way this has worked in this market, maybe this is where you buy it. But I'm not really going to buy it myself. And I think like I'm pointing out here, there are better things in my view to try and play if you're going to try and play this market on the long side. Citron has a negative piece today on Beavis. Yeah, I mean, the South Park drug is like a lap band, I guess. I don't know. I think people just eat right. Somebody says, thank you for the MLR and the analysis on MLNX. Okay, you're welcome. Somebody says the Bible gap up only works well only off of proper bases. That's not true, actually. I'd go back to Apple in October of 2004. It gapped up big, and it was not in a base. It was coming out of an uptrend, and it accelerated to the upside, and then the thing took off, and I bought 350,000 shares on the day of earnings at around 43, and within a couple of months the stock was trading somewhere around 90. So that's not necessarily true. I think a lot of it is contextual, and you have to look at the story and exactly how fast is the growth in this business for Mellanox being driven. I think the earnings report yesterday confirms to investors that it is actually being driven very quickly. And so, contextually, I think you just look at the very strong pattern, and my view is it can go higher. So. And I wouldn't just lump them all together and say they only work well off of constructive bases. Although maybe that's more likely to be the case. But I think in this case this could work, so we'll see. So far it continues.
Context is very important. And if you look at some of our presentation handouts, we go through some of the rules in terms of what qualifies as better viable gap ups than others. I mean, for instance, if a stock is in a concerted downtrend and it has a gap up, that's not going to be a viable gap up in most all cases. So that you can say as that's a useful general rule. But there are, like Gil pointed out, the upside cases where you have a lot of upside momentum. That's the general idea, is that you want to see upside momentum in the stock, or you want to see a constructive base form out, and then you want to see the viable gap up. That's going to be the chances of that gap up working are much greater than a stock that's in a downtrend.
Everybody there? Dr. K,
Yeah,
you
I'm
there?
back.
All right. Somebody's asking about GNRC, and this is a story on generators for the after the Midwest. But look at this pattern. It's like it's all over the place. It's kind of doggy. It trades 403,000 shares a day. It's a story stock right now, so it's not something we would play. Pocket pivot in Z didn't hold up. Stocks coming in. The way I look at this is it had a pretty sharp move off the 200-day moving average. You had a pocket pivot off the 50-day here, and then another one. I would call this a pocket pivot because this day here, even though it was higher down volume, the stock actually closed right at the peak, close to the peak unch, so it was almost more like accumulation rather than selling. So you get up to the top of this base, and I think it needs to rest, so I think you'd look for a handle to form. So you had a pocket pivot yesterday, but not necessarily going to buy into it. I think we talked about it lower. I'm not sure. But we actually had a position here that we bought down in here and sold it on the basis of the fact that it probably needs more time to go sideways and build a proper cup with handle. And also earnings are coming out, I think, at the end of August. RNF is that little fertilizer stock. That's been moving along with the rest. But again, you're going straight up off the bottom. You need to digest this, and you're going to need to go sideways. So if I had bought it lower and I had a profit, my inclination here would be to bag the profit and then sit back and wait and see if it issues another buy point. I know Ross has loved this one. DDD, 3D, what do I think of their growth prospects? I don't know. I guess these companies that make these 3D copy machines or whatever, where you can, they produce, you create a design and then it prints out in 3D a little plastic version of what you were designing so you can see it. I think these are interesting technologies, and the stocks are very volatile, so I'm not really that thrilled with it.
SSYS is another one. They do the same. They're involved in the same area.
And
there's a lot of hope. There's a lot of hope for these types of names because the technology is cutting edge. And
so I mean, if you want a story, well,
verification in the pattern, the price volume action in these. I mean, SSYS, it's got a powerful story, and like I said, it's a small cap. In this environment, because of the volatility in the pattern, it makes me a little nervous to trade this kind of stock. But again, if the story is intact, if it remains intact, then this could be certainly viable. If I start seeing another type of pocket pivot action in the stock that's constructive, I might take a position.
Yeah, so that's how we look at it. Q-Core, we don't really have any thoughts on Q-Core, so I mean, you guys should know what we think. That you don't want to touch this thing with a 10-foot pole, so not really much to think. I also, this gives me an opportunity. Just maybe we have a new person here, but that the thoughts on a stock are pointless. If you see some strong technical action, then you need some thematic basis for having confidence in holding the stock and continuing to build a position in it. And so that's really when your thoughts about a stock might be relevant. But other than that, when something's busted like that, there are no other thoughts than this is your thought right here. Heavy volume blow and to the downside after a really strong day here. That's something's wrong there. We don't play. So current thoughts on Dunkin' Donuts. I don't know. I don't have any thoughts. It's not exciting me. There is one down the street. There are always police cars out there, but we love our LAPD. Just keep the terrorists away and all those vermin from the east side. But any case, Dunkin' we're not into. Talked about LinkedIn. There's no volume on the breakout today, so it looks good, but it tends to do that, just wedging higher. Earnings come out. I'd be more comfortable buying this on a gap up after earnings and trying to buy into these low volume moves up. So to me, it's kind of SGen. Oh, SGen, one of my favorites. I actually sold the stock yesterday around 27. You go straight down, straight back up. It looked like you take profits and back off and then see what happens. I like the pattern of the stock though, but one thing that bothers me just a little bit is it's slightly wedging along the lows here. You did have this 1 week to kind of correct it, but I think it's going into earnings. I think it's kind of a hold here possibly. So for me, that means I go somewhere else and look for another move in the short term. Does it concern you that small and mid cap indexes are underperforming S&P over the short term? Dr. K?
Well, that's just typical of an environment where the market is uncomfortable. I mean, comfort brings speculation. They want to speculate, in other words, in faster movers. Faster movers tend to be small caps. So if small caps are underperforming, that tells you the environment you're in, which is one of nervousness.
Yeah, people are moving more into they want steadier, bigger cap names, and I think that's constructive. So not really something to worry about or get too concerned about. eBay. Hey, Dr. K, I'm going to take a quick minute break here. You want to go ahead and discuss eBay, and I'll be right back.
Sure. So we have eBay that had a gap up on April 19th of this year, and it didn't really excite us a whole lot because if you look at the general pattern going back many, many months, it's kind of a slow poke of a stock. I mean, it had its day. It's kind of like if you look at Microsoft or Cisco back when they were young companies, they had huge moves, and then they never really had those kinds of moves, those power moves ever again. I think eBay falls under that category. So if you look at the price action, just the price action of the stock, it kind of puts you to sleep. And so this last this gap up in April, and then the gap up we're seeing today, not real exciting to me. It's on my watch list because it is such a big, it's a major company, and it's a tech company. I want to see how it performs relative to the market, but it's not something that I'd be looking to actually take a position in.
Yeah, not kind of a V-shaped thing going on. Anyways, I'm back. Hey, Gil, you want to comment on SSYs? We did anyways. HGSC, what is that? Is that right? HGSC?
No, I don't think there's a ticker there.
Okay.
Unless it's a bulletin board stock.
Must be a penny stock. No way. Can you explain an ANTS breakout? It's not an ANTS breakout. It's just when a stock is up 12 out of 15 days or more, it will show little ants showing power in the move, and so that's really all that is. I don't think I have any on my charts here. Let's see. Anything over here? Yeah, I probably have it here. Let's see if there's any stocks that have it. I wonder if it shows up anywhere on F5. I think it might at some point. No? I know which one might have it. Yeah, these little triangles, they show up when a stock is up 12 out of 15 days in a row or better. These little black triangles that we call ants will start showing up. It's usually a sign of power, but in this market that tends to be kind of sloshy, we don't really pay too much attention to it, and you don't really need to. This one for you, Dr. K. Does it concern you that the majority of the accumulation distribution ratings for the major long ETFs are either D or E?
No, that's not something I track. It's not. It's added noise to what's really important.
Yeah.
And now that said, I would add that if you're looking at, say, in a basket of these things, and you're looking at a lot of demand, a lot of accumulation, a high accumulation distribution rating, say an A or B, for a number of, say, inverse ETFs, that's a clue. That's telling you that there's a lot of demand for. A lot of people are saying that they think the market's going to go lower. And if you use indicators like effective volume, that could be a clue. It's a valid clue that maybe the big money is nervous and they're either hedging themselves or they're getting on board. They're placing bets that they think the market's going to go lower. And of course, it can work in reverse. So that said, the accumulation distribution rating does have its place, but I think effective volume is a more valid indicator.
Yeah, I'd also look at sometimes ETFs can be a contrarian sign as well, telling you which way everybody's leaning. So I would, again, focus more on the actual index action. But we know that we're in a choppy, sloppy environment. We know that much. Somebody asked me how my diet is going. Actually, not on a diet. I just got rid of gluten, which just eliminates like 90% of the processed foods out of there. Apple earnings next week. How would you play it? I would just, if I wanted to own Apple into earnings, we have a 10% position right now, and we'll probably hold that into earnings because you figure even if it drops 50%, it's going to cost us 5%, so that's tolerable. Other than that, that's how you play it. Okay, yeah, we did lose audio just for a second though, but that's everybody can hear me now, correcto?
You're coming in fine. It was at, I don't know, 20 minutes ago, everything went silent for long enough that I decided to restart.
Yeah. Sometimes you get a freeze up or something. Let's see. Is win a possible pod on a weekly chart? Huh? Well, no, I don't know. Where's the pod? It would have to come all the way back up to the highs, so don't really see that. So no, it's not. Price line we talked about. TFM. Is that fresh market?
Yeah.
You shop there all the time, right, Dr. K? No, it doesn't excite me. This one doesn't excite me either. So.
They got Whole Foods over here, which is I assume is about the equivalent, which is it's good products.
Fran, this one had a pocket pivot, but again, straight up from here, straight up from the 50-day, it's got some overhead. We actually bought some of this in here, and we unloaded yesterday into this move. So again, we're kind of swing trading these, because the idea here is now that you're at the peak, and this is similar to what we saw with the other one I was looking at earlier, Z. Similar situation, you run up to the right side peak of what looks like a cup now. It needs to go sideways and build a proper handle in our view. So if we have a profit from here and we played that pretty well, or well enough, we're going to take the profit and just kind of go away and wait. So that's the thinking there. And a lot of times, the way, and I would say these are in the portfolios that Ross is running, and the way Ross operates, and you got to remember, this is a guy who helped run a $650, $700 million fund at one time that doubled the investors' money from start to finish. So he actually did pretty well. And Ross, what he tries to do initially, will take buy points when most people maybe aren't willing to step in, and he'll build small positions, boom, 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 take small profits, and now he slowly starts to work himself into a 2, 3, 4, 5% cushion. Then he'll start to build out the risk from there, if the market trend continues to develop. And we're kind of like a little bit in between of a rotational zone. Twilight zone, I think, and so we may shift again. But in that case, we're kind of just keeping an eye and seeing what's working. And you see the market sloshy, but I don't think it's going to break down. I just really don't. SWHC, Smith & Wesson, everybody's favorite gun stock. But, here's a gap up. It's probably a Bible gap up. Cheap stock. That's about it. It's holding up. Ulta, Dr. K's X, as I refer to it. You don't still own this, do you?
ULTA?
Yeah.
When did I own it? I don't know if I own this. If I did, I probably was insignificant, because I don't really have much recollection of this one.
Right.
I mean,
I do remember at one point
it had that gap up there. Oh, if you're talking about way, you mean long ago.
Back in here, more like in here, like a month ago, which in our time is a long ago in a galaxy far away. Yeah, so that is true.
Yeah, it's possible. I took a small position in it, and then it didn't. I don't think I did, but if I did, let's say I had bought it on that day, on that gap up day.
It'd be gone.
I mean, it doesn't do anything wrong, but then it doesn't really go anywhere. So it would have put me to sleep, and I would have sold it out, probably at a break even, or slight gain or slight loss.
Somebody says
I've
been
using
using
stocks move, and this one didn't. And even when it has moved, it gets going, but then it's still not the type of stock that I would buy. I don't believe I bought this one.
Yeah, I don't care for it either. All right, somebody says they're using the O'Neill method. Uh-oh, you know what? You haven't been using it, very long, because you can't even spell the name right. So it's not O''Neal, it's O'Neil. Anyways, so maybe you need to read the book a few times more, and then you'll get the name right. And when you do get the name right, then you'll maybe get the system down better. But you've been plugging away, he says, still waiting for that window to open, and yeah, it can be a little frustrating. I understand that, but hang in there. I think at some point we are going to see a nice bull market emerge. iSurge, but please remember to spell Bill's last name O''Neil, not Neal. I think he'd be very offended. Yeah, he probably wouldn't care actually. Intuitive Surgical, just trying to build a base. Here's the weekly chart, and that's all it's doing. But still kind of late stage. It acts okay, but it doesn't thrill me. Let's see. Dr. K, what will it take to put the MDM into a buy signal now?
Essentially, more constructive action on the part of leading stocks that we're tracking, and on behalf of indices as well. The problem with this trendless environment is that the volume action doesn't always sync up properly. So the model may elect, like it did post May 2010 flash crash, to stay in cash for a little bit longer than it normally would. Post 2010, the market was pretty choppy, trendless, and unpredictable. So so that the fact that it ignored a number of signals led to only, I believe there was only one bad signal post 2000 and May 2010, and I think there were two good ones. And the other three that it could have taken and didn't would have been losses. So the model may elect just to stay longer in cash at this juncture. We really need to see some sort of discernible trend emerge in the market, in the general market. I think for the model at this point to elect to go either long or short the market. And now that said, with these shorter-term tools that we've developed, we're looking to see how they would potentially integrate with the MDM.
Yeah, I'm kind of working on those, but it's helped to keep us out of some trouble. So let's see what else. I think that's pretty much it. So give you some insight as to what we're looking at today in the markets, and hopefully that was helpful to you guys. Where we see areas of strength, we only need a couple of stocks to rock and roll. And today, I'm playing these two, and we're getting some nice movement here. I know it's F5 running into some resistance here. Right now, I'm still staying with the position, and I probably will unless I see it bust in that 98 again where I came in. So we'll see what happens here. But it does show also that in this market, as a trader, and you're trying to be a swing trader, I'm trying to work a lot of things in my mind thematically to see where money might start to flow, because it is a very uneven trend. And I would also say that you could stay in cash here and you'd be fine. Go golfing, go swimming, whatever you do in the summertime. Go drench yourself in the 2 to 3 inches of rain they're having somewhere in the country, according to one of the IM questions I got here. And it could just be like that. But I'm testing out a few things. I think Mellanox could be a big leader, and if some of these other tech stocks start to come on, and we are seeing the Nasdaq outperforming right now, it's up 0.69%, whereas the Dow and the S&P on a percentage basis are roughly flat. So you are seeing this rotation back in tech, and I do think if you are seeing potential for an inflection point in policy as a result of the November election, or the market started in the sense that, then I do think technology would be the most leveraged to benefit from that. And maybe some consumer names, so I'd keep an eye on some of those, like the Fran. Priceline is actually kind of interesting, coming around building its base, but you got to let these put in some more time. But I think those are areas where you'd have more leverage to the perception of an improving economic climate and regulatory environment. So rain in northern Indiana. Okay, Indiana's a pretty state, actually. I've been there. Black Hills of southern Indiana. And Columbus, Indiana. Nice little town. Anyways, I searched. I already went through. Last question. You got it, Scott. Again, just building a base, and that's pretty much all I can see here. I don't see much else outside of that. So, anyways, so that's all we got, you guys. If you have any other questions, you guys email us, and we'll try to answer as best we can without holding your hand and doing all the thinking for you in terms of portfolio advice. But that's about it. So we're kind of in a a little bit of this, a little bit of that, maybe a whole lot of nothing type market, choppy environment, summer doldrums, call it whatever you want, and that's where you're at. Showing you a couple things we're looking at, but outside of a few handful of ideas that we have right now, not too much going on. So that's it. Dr. K, anything else?
No, I think that expresses it.
All right. Take care, everyone. We'll catch you next time.
So long. Bye-bye.